Aloha and happy New Year's, everyone. First off, before we get to the new long positions and hedge signals, I want to talk about the market. The price action on Friday was very negative. The way that we closed, the velocity of the sell-off was very negative with heavier volume in the NASDAQ and New York Stock Exchange. It is a significant reversal, and across the board, no matter what index you look at, the Dow Jones Industrial Average, the transportation average, even though it still looks great, which is very, very good. But every index move on Friday came with confirming rollovers in the MACD and RSI 14 oscillators on every index. The NASDAQ rolling over from overbought, Russell 2000 rolling over from overbought, Dow Jones Industrial Average rolling over from overbought, and the S&P 500 rolling over from overbought. So with that in mind, look at that volume on the S&P 500 too. So with that in mind, short term, there's got to be some adding of the hedges. I'm adding to my SDOW hedge, SDOW hedge that I still have, because remember what I'm now doing on all hedges is I'm partialing out of them all like I do my VIX trades. So like I said, if I buy 100 shares here, hits a new low, I'm out of 50. The next new low, I'm out of 25. The next new low, I'm out of 13. The next new low, I'm out of 7, and so on until I have no shares left, because this market is so overbought and so long in the tooth that I think that by the time this market really gets moving to the downside, I will not have any chance to add or put on any hedges. So SDOW, SPXS, and then a brand new SRTY hedge are all new and being added to on Tuesday. Now I have limited capital. I can't put any more than 0.5% into any of these new 7 quality signals. So keep that in mind. But SRTY, SDOW, and SPXS are definite hedges. Please go look at the new positions page for the limits and the stops. For SRTY, it's 32.39, stop 30.96. For SPXS that you're looking at here, it's 30.06 limit, 29.35 cut loss. And for SDOW, it's 19.55, cut loss at 19.20. Now, moving on to the new long positions, there are actually 2 higher quality ones and then a higher quality canceling signal. But obviously, stocks that are near their all-time highs, 52-week highs, are always going to be my preferred stocks to choose from. So if you're forced to put work to any of the signals, WVE is going to probably be one of your higher quality ones because it is perfect speculator quality, and there is just one main cut loss level right here. So what I'm going to, like I said, 0.5% is all I can do, but it's really just a 1% signal for being a low price perfect speculator scan. But beautiful previous move, nice consolidation, quiet base, candle over candle, heavier volume, BOP confirmation. Going to get long at 35.35, and I want everybody to just use the 33.65 level, but I don't know. I have written down here 30.65. I don't know, where's that at? Where am I getting 30.65 from? I know where I'm getting it at now. The 50-day moving average. I looked it up on stockcharts.com. I'm going off my notes here. So first cut loss level 35.65, and you can have a second and final one like I will at 30.65. Just make sure you obey the limit order at 35.35. But out of all the long signals, this is going to be the best one because it's near 52-week all-time highs. Looks like it's building a giant cup with handle pattern with the candle over candle off support. This might be a great area to get into if you do believe it's going to break out to new highs, like I would expect it to if it works, but we'll see. APPS is the other perfect speculator quality stock. This was also in my green BOP for the past 20 days scan. Beautiful previous uptrend, a lot of green BOP, a lot of big accumulation on the up moves, extremely quiet volume here as it consolidates in this pennant formation towards the 50-day moving average. I don't have necessarily a candle over candle, but I have a bullish hammer candlestick price bar at very strong support here in this current consolidation with the 50-day moving average underneath. Want to get long APPS, limit order 180, first cut loss 174, and I think my final cut loss, my personal B1, would be 153. But for everyone else, you might want to just obey 167. So if you do carry 2 stops, 174, 167. I'm going to be a little bit more loosey-goosey since I can only get 0.5%. And I would want to allocate more to this stock, you know, if I, let's say, if I had to select more. The reasons why this wouldn't be my top selection out of all of them because it's not at all-time highs. WVE is. Now on the other end, we have a canceling quality stock bouncing off its lows, a SASR. SASR is not only canceling quality, it was in my price volume BOP surge scan, and in my green BOP for the past 20-day scan, and in my max green BOP for 5-day scan. That's about as good as it gets for that is actually as good as it gets for a stock bouncing off the lows. If it would have made my daily volume surge scan, which that would have been then the ultimate confirmation. But great little pattern here off the lows. Want to get long, SASR 39.17, the high of the day. First cut loss level 38.29, final cut limit then maybe 38.05, final cut loss level maybe 37.89. Yeah, so you could use 37.89. If you just want to use the green BOP levels though, it would be 38.05 and then 38.29, because with this huge volume surge right here, this low should not go 12.28 low. I mean, that's a huge volume move with all that green BOP. I definitely don't want to see that violated. 1, 2, 3, 4, 5, 6, and then one more, WLH. I didn't want to make this video too long, and I'm doing good at that. WLH is an add signal. You can see the first long signal was right here just a few days ago. So far, it's working out. I've got a bullish hammer candlestick over candlestick price bar on not extremely heavy volume, but very, very, very heavy volume with a very big surge in green BOP along with the pocket pivot point signal. So overall, that's really, really, really solid chart pattern. Canceling quality stock near 52-week highs, actually at near 52-week highs and all-time highs. So I definitely like it. And I like all the previous green BOP here, all the positive BOP. I love all the volume accumulation, the tight consolidation. Want to get long, or want to add to WLH at 29.08, the closing price, because it's slightly extended from its 20-day moving average. Your first cut loss level could be right here, or it could be right here. Or you could use right here, and that's actually probably going to be my first cut loss level, because if I had a big position, it would be here, 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 and then maybe right here, and then maybe here, here, here even. But for right now, for this add signal, just one stop loss level here at 27.75, because that's where it's got yellow BOP again. So if some odd reason from my new long position add signal that would fail, that level would fail, I don't think it's going to hold up to these levels. So we'll see how it works out. But anyway, very, very short term, the market looks rough. That's why the hedges go on. SRTY, SDOW, SPXS, those are legitimate signals. But intermediate term, the market probably appears fine, or else why would we get a nice signal like WVE, APPPS, SASR, or WLH? Could they all be fake outs? Yes. That's why if you do go long, you must obey the stops. That's why if you do go long a heavier size than what I recommend as allocation, you must keep tighter stops. The main rule right now in this extremely overbought market, with the market rolling over from overbought territories with RSI and MACD confirmations, is to keep your losses small if you're wrong. I may like APPS, WVE, and WLH chart patterns a lot. It does not mean they have to work. So you must prepare like they won't work. If they do work, great. That's what I expect them to do, but it doesn't mean they will. So obey those recommended stops. All right, everyone. Once again, Happy New Year's.